Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's raining heavily here from this part of the world, very, very heavy. And in fact, we had to um, do some maintenance outside to avoid being drenched. Some of our property being drenched outside, so I had to do this before coming in live. So I'm very excited to welcome you all. And how are you doing over there? How is your weather? From which part of the world are you tuning in from? Please let us know in the comment section and let us relate together on this one. So, as always, I'm very excited to welcome you all to yet another promising edition on the Forex Morning Mastery. Of course, our midweek review, where we are going to be through the lens of both technical and fundamental perspective, try to have a deeper insight into how the market participants have been behaving since the beginning of the week. And of course, we are also going to be looking at how well the asset we are monitoring so far this week has been doing and how we can use the recent historical data in conjunction with the fundamental factors behind the scenes to strategically position ourselves for the next move. Well, so far this week, we have been monitoring three financial assets, which includes the US All Spot, the GBPUSD, and of course the XAUUSD, all of which are doing fairly well. The US All Spot had risen significantly due to the geopolitical tensions in the Middle East, and recently we had the significant drawdown in the crude oil stockpile in the United States, which obviously had raised the tempo of the ascent of the US All Spot. We are going to be looking at that in a moment. Then on the GBP/USD, we had a choppy market conditions mid Monday, Tuesday, which resulted in a couple of losses on the GBP/USD, and of course, recently we were able to capitalize on another momentum. We are going to be deliberating on that one too. And of course, the XAUUSD, my favorite amongst them all, has been doing pretty well since the beginning of the week. So I encourage us all to stay tuned in so that you do not miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us this morning. You may be wondering what this is all about. What is it that we do here on the Forex Morning Mastery? Well, first of all, like I usually say, this is in no way a signal service platform. So instead, we are here to learn and of course try to understand the current market dynamics with the utmost intent of strategically positioning ourselves for the next move. And of course, I do understand that we have different classes of traders amongst us. We have day traders, we have scalpers, we have positional traders, and of course swing traders who obviously have different approach in their target and risk management approach. So what we simply do here is to try and understand where is most appropriate to execute either a buy or sell order. And of course, you can use this information to identify and manage your positions independently. So my aim here is to we should equip ourselves with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help in enhancing your own trading decision and trading strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. You can ask me any question as long as it has to do with the financial market, and trust me, I'm here and willing to be of help in that regard. And if you have found this content helpful and useful in any way in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. So with that being said, we have a couple of comments here. I can see you C40. Good morning to you. Of course, we are all ready to learn. I'm also a student of the financial market, so we are here to learn, understand what is going on in the market, and of course use that information to position ourselves for the next move. I see you Sahad. Good morning to you. Thank you very much, C40. I really appreciate this from the bottom of my heart. So C40 is advising us to do a little bit of SEO compliance strategy by including some Forex wordings in the comment section so that we can attract more viewers and of course help the algorithm to push these videos to the appropriate viewers who will find this content beneficial to them. So I will be typing Forex Morning Mastery in the comment section, so I encourage us all to do the same. Let's help this community to grow. This is the cheapest way you can actually help us to do so. I see you Sahad again. Oh, from North Africa. It's really hot there, really. Oh my goodness. Which part of North Africa are you from, Sahad? Please let us know. Let's relate together. All right, so I see you Alexandria from Jamaica. Good morning to you. I'm so excited to have you in. Is this your first time, Alexandria? Please let us know in the comment section. I can also see you Tammy Klo. Good morning to you, Tammy Klo, and good morning to you. Okay, Sahad says from Morocco. Assalamu alaikum. Are you a Muslim? All right, so with that being said here, let's just dive right into the business. And the first thing we normally do in this community, for those of you who have been with me for a while, you know how we do it. The first thing we want to be doing is to try and keep tabs with the fundamental factors behind the scenes, which is likely going to be influencing the sentiment in the market today and of course the second half of the week. And in fact, I do think that we are going to be looking forward to some high level of volatility during the course of the second half due to the high impactful event we are looking at. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the asset we have been looking at since the beginning of the week, we are going to be focusing on economic features from both the United States and the United Kingdom economic docket. Now, on the economic calendar, we have a scanty high impactful event during the first half of the week, but today we are going to be looking at three high impactful events all coming in from the United States. Now, before we go into the high impactful event for today, let's look at what really has happened during the course of the week behind the scenes and of course from the fundamental perspective. Now, the first one here is we had the ISM manufacturing PMI on Monday, which of course is considered to be a leading economic indicator in the United States, which gives us an insight into the economic expansion or contraction in the manufacturing sector. And like I told you all on Monday, the PMI data report is it's an index which ranges between 0 to 100, and anything above 50 shows signs of expansion in that sector, and anything below 50 is a sign that there is a contraction in that sector. Now, looking at the report that came in on Monday, we saw the data coming in at 48.5, a little bit lower than the market expectation at 49.1, and of course a little bit lower than the previous month data, which came in at 48.7. Now, from all the data here, it shows that the manufacturing sector in the United States is not really doing very well, as the figures came in lower below the 50 mark. And what does it tell us? It tells us that there is a contraction in that sector. Then moving on to Tuesday, that was yesterday, July 2nd, we witnessed the ECB Economic Forum in Portugal, and we had the Fed chairman who was one of the guests, and he spoke. And one of the major highlights we come to get from his speech, there was nothing surprising from what he said, and he went on to further acknowledge the disinflationary pressure in the United States following the recent economic data, which shows that inflation is gradually easing in the United States. And of course, he also acknowledged the idea that there is likely going to be interest rate cut anytime soon as they continue to monitor the economic data, especially labor-oriented economic data. Now, this for us is a sign that due to the potential interest rate cut coming in anytime soon, we may likely see the US dollar drop significantly to the downside, and we could see other assets take advantage of this opportunity to boost their momentum to the upside. So we need to take that into consideration, and while taking that into consideration, we are going to be looking forward to some labor-oriented data coming up this week. We have, remember, during the later part of the week, we are looking at the average hourly earnings and of course the almighty non-farm payroll, which definitely will be influencing the sentiment in the market as we approach this event. But today we are going to be looking at the ADP employment change report. And for those of us who do not know what this is all about, well, this is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Now, a positive ADP figures indicates substantial job growth, which often boosts market sentiment as they suggest a healthier labor market, while negative figures today may lead to concerns about economic slowdown and weigh on sentiment, and of course potentially incite the idea of, or let me say, aggravate the idea of potential interest rate cuts anytime soon. Now, looking at the figures from the previous month, it came in at 152,000, and consensus market participants and economists are projecting 160,000, which is a little bit higher than the previous month of 152,000. And like I said earlier, if the data comes in higher than expected, that will indicate job growth, and of course potentially allow the Fed to maintain a higher interest rate for an extended period of time. So we are going to be looking forward to what this data is going to be like. Will it be just as expected, below expectations, or even beyond expectation? And the timing of this event is in about 3 to 4 hours from now. So I encourage us all to mark out that timing so that we can be around to see what structure evolves prior to this event. Then in about 6 hours from now, we are going to be looking at the ISM Services PMI. This is another PMI report. Like I told you earlier, it ranges between 0 to 100. Anything above 50 shows that there is an expansion in that sector, and anything below 50 shows that there is a contraction in that sector. Now, what is the ISM Services PMI? Well, the ISM Services PMI is an economic indicator that measures the performance and expectations of the service sector in the United States. And obviously, a higher than expected data typically signals economic expansion, boosting the market sentiment in favor of the US dollar. Now, if we look at the ISM Services PMI here, you will see that the data from the previous month was higher than the 50 mark, which is a positive signal. We had a 53.8 in the month of May, and based on what is on ground right now, market participants and economists are projecting 52.5, a little bit lower than the previous month data, but is still higher than the 50 mark. So we are going to also look forward to see what the actual data will be on that one. Will it be in favor of the US economy, or will it be against it. Then finally today, much more later in the day, that's about 9 to 10 hours from now, we are going to be looking at the FOMC Minutes publication, which obviously will be giving us an insight into the decision making. Remember, we had the Fed interest rate decision, I think, was it last week or a couple of weeks ago, and this minute will detail what really happened during the meeting that led to the decisions that they made a couple of weeks ago to maintain interest rate at 5.25 stroke 5.5% at that point. So we're looking forward to see that minute. It will give us an insight into what really led to the decision making, the vote ratio. We want to see the vote ratio of the Fed officials. What ratio was it against and for? We want to see the ratio, and this will give us an insight into what the monetary policy is likely going to be like. So these are the high impactful events we are going to be looking forward to today. And of course, we all know that the anticipation of this high impactful event usually reflect on the chart as price action. Of course, everyone, as they anticipate this report, they position themselves for this event, and it could reflect on the chart as patterns and structures which we as retail traders can use to strategically position ourselves for the next move. Now, with that being said, here we will be diving right into the business, but before we do, I have a couple of more comments here. Let's just run through quickly and let's see how this goes. Okay, so we have Saad. Okay, you're much welcome. Salam to you. Thank you. Alexandria, thank you very much for that tag. Thank you very much. And then Michael Mowa. Good morning to you, Michael Mowa. Trust you're doing very well. So Michael is asking, can you explain how the US Treasury bond yield affects gold prices? Okay, a very simple question you have there, and I guess you're new with us because we normally talk about this on a daily basis when we through my commentaries on both my TradingView and Telegram platform, and of course during our Forex Morning Mastery. Now it's simple. The US Treasury bond yield is directly proportional in value to the US dollar. So what this simply means is that if the US Treasury bond yield is doing very well, it affects the US dollar positively. Now, the US dollar being a currency that is against the XAUUSD, so if the US dollar is not doing very well and it is dropping, then the gold will continue to rise. Now, if the US dollar drops, if the US dollar rises, then gold will drop. So gold and the US dollar, gold and the US Treasury bond yield are indirectly proportional in value. So it is expected that when prices of gold rises, then the US dollar will drop, and when prices of the US dollar rises, then it's expected that gold to drop. So some correlation traders usually use this phenomenon to make trading decisions, but I'm not an advocate of correlation trading. I rather want to see what is really going on the chart to really understand how market participants are behaving before making any informed decisions. So I hope I made myself clear there, Michael Mowa. If you need some further clarifications, feel free to let me know in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first asset we normally look at, hold on a second, I didn't open this before, so it will take some time before it loads up. I don't know why my USOILSPOT on TradingView usually takes a while to load up. Do you experience the same thing over there? I usually experience it whenever I'm opening my USOILSPOT chart, so it's going to take a while. Let's hold on and see. If you have any questions, please feel free to drop them while we wait for the chart to load up. Thank you very much for the love. All right, so let's see what is going on here. I would like to open one more chart so that let's see which one opens faster. Okay. So please, while we wait, I will appreciate if you can support the project by giving the video a thumbs up. Like I usually say, your likes are very, very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. So we are still waiting. Okay, so let's see this one. Okay, I think it's finally up. So we are going to be taking on the USOILSPOT, and we will be diving right into our 1 hour time frame. Remember, this is our execution time frame, and we're only going to be deliberating on the 1 hour time frame. We already done a top-down analysis on this asset at the beginning of the week, and if in any way you missed out on that Monday session, you can check the link right in the description box below to have an insight into how we got to this point, how we were able to identify our key levels, the major trends, the secondary and primary trends that guided our trading decisions for this week. Please check it out. It could also serve as an educational tool in helping you to understand how to use price action based technical analysis in conjunction with fundamental factors to make well-informed trading decisions. So with that being said here, let's dive right into the business and look at what we have here at the beginning of the week. Remember, our key level for this week was at the $81 area, and it still is at the $81 level. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying, except for rare cases where we have significant confirmation that truly sellers are gaining potential at that point. So at the beginning of the week, we had a range bound structure where price action was initially confined within the $81.55 level and the $81.15 area. That's like a 40-cent range bound structure, giving us an insight into the prevailing uncertainty has at the beginning of the week. And you know how we do it in this community. Whenever we have a range bound structure like this, all we want to do is exercise patience and wait for the market to finally make a directional decision, which will either come in the form of a breakdown of the support line to give us an opportunity to open a sell position, or the breakout of the resistance line to give us an opportunity to buy. Now, as you will see here, at no point in time did we see price come down to break down the support line, but instead broke out of the resistance line of the range. And of course, we saw how the market price triggered our first buy position above the $81.55 level. And for those who missed out on that first entry, remember I mentioned on Monday that we should wait for price come back to retest structure, and then we can continue the uptrend scenario. And look at what happened. Price continues to climb, find new highs, and we had multiple levels that we used to maximize the potential of this bullish move. So we had levels like the $82 area. We also added one more, had the breakout of the $83 level. That was during the early hours of yesterday to maximize this profit. And of course, we were able to capitalize on about the first buy position moved for about over 200 pips. The second one moved over 160 pips, and the third one moved about 50 pips thereabout. And after we moved our stop losses to secure all buy positions, we were taken out with a significant amount of profit on this particular asset. So as of the first half of the week, we are doing very well on the USOILSPOT. And since then, price action had continued to drop to the downside. And as it is right now, we are at a crucial juncture where, depending on how price reacts to this current area, will determine what our next line of action will be. However, before we go into the details of what is going on here and what has really been influencing the sentiment in this market. Now, looking at the US oil spot market, there are various factors behind the scenes that has influenced the sentiment. We talked about this on Monday, and in fact, there are new developments in the market so far. And for those of you who are with me on my TradingView and Telegram platform, you must have gotten an insight into this. But we will talk about this quickly. Now, first of all, here is the supply concerns about the US oil spot. Now, the ongoing conflict in the Middle East has raised concerns about potential supply disruption from key oil producing nations from that particular area. And we talked about how the Israelis and the Hezbollah, that is from Lebanon, are beginning to there is a conflict going on now which could escalate into an all-out war in that region. And of course, this could draw in Iran, which is known to be one of the highest supplier of crude oil in the global market. And if this is going to be the case, we may likely see some oil disruption in that particular area. Now, due to these concerns here, we've seen market participants increase their demand for oil, and our simple economics tells us that when demand rises, what happens? Price will definitely rise. Then another factor behind the scenes is the hurricane season we are in right now, and there is early and strong start to the hurricane season in the United States, which obviously has had to supply concerns too as well, potentially impacting production and refining operations in the US. Now, this also could influence the sentiment positively in favor of the US oil spot. Then finally, here is the API inventory report which came in yesterday. And so the API is the American Petroleum Institute. They usually report their stockpile for the previous week on a weekly basis. So the stockpile report really tells us the demand and supply dynamics in the market. And from the report we got yesterday, we had a significant weekly decline in the US crude oil stocks, falling by a deficit of 9.1 million barrels through last week. That's a whopping figure we have there compared to the previous week, which was at a 3 million barrel deficit. Now, the market was actually expecting a 150,000 decline, but this report here shows that there is a significant decline in crude oil stockpile. Now, what does this simply mean? It means that the US had to eat into this their inventory to meet the demand in the market. Now, when there is high demand, it usually eats into the supply, and this obviously has incited a positive sentiment in favor of the US oil spot. Now, if we take all of these parameters into consideration, it is clear that the path of least resistance for oil prices is to the upside. Now, with this idea in mind, how do we intend to manage or get ready for the next move as the US macroeconomic data today draws near? Now, in preparation for today's trading session, I have a new structure which I identified this morning, and that is this ascending trend line you can see on your screen right now. And what I did here is to take into consideration the character of price action since last week Friday, and after connecting the series of higher lows here, we have a beautiful ascending trend line to work with. And of course, you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, with the way things are going right now, you will see that since the later part of yesterday's trading session, price has been struggling around this ascending trend line. And in fact, in the last 1 hour, you will see that price is back into the trend line and has been oscillating around that area. Now, the question as we head into today's session is, will price respect this ascending trend line one more time to continue the uptrend, or will it break it down and then probably go to as far as the key level at the $81 area? Remember, we have an ascending trend line here on the 4 hours time frame, which has been supporting the bullish momentum in the last 7 to 8 weeks in this market. You can check out our Monday session to have an insight into what things are looking like on the 4 hours time frame. So you would agree with me that with this information here, we are at a crucial juncture in this market where, depending on how market participant reacts to the structure, will determine if we are going to be buying or selling. Now, due to the fact that the momentum is looking much more bullish, let's talk about the potentials the buyers have at this point. Now, we want to consider buying this USOILSPOT at this point, but where is most appropriate for us to consider buying? Now, after considering this impulsive bearish leg down into this area, you will see that price appears to be doing some consolidation phase between the $82.80 level and the $82.10 area to emphasize the level of indecision going on at this point in time. How are we going to see a reversal setup evolve? If it does, we want to be buying the breakout retest of the neckline and then join the uptrend scenario. Now, the lowest point here in the last 12 to 15 hours now is the $82.25 level. So let me mark it out here for the sake of clarity and visual representation. So I would like to give this a purple color. So we have the purple color. Okay, let's use red to signify its importance at this point. So we have the $82.25 level. So I encourage us all to mark out these levels on our chart, as we will be needing it as a reference point to guide our independent trading decision. So looking at the structure here, if we have a situation where buyers find it difficult to break through the if sellers find it difficult to break through the $82.25 level, we may see a transition into a reversal pattern. It could be a double bottom structure, it could be a falling wedge, whichever case it may be, to inside the idea of buying. Now, if that is going to be the case, we will be having a potential neckline maybe somewhere around here at the $82.75 area. So I will just mark that out appropriately so that we can have a visual representation to work with. So we have the $82.25 area. So I would like to see a breakout retest of the $82.75 level to continue this uptrend move. So a breakout retest could be a very good opportunity for us to join, and in fact we have multiple levels here to maximize the potential of this bullish move. We have the $83.10 level and the highest point in recent time, the $83.70 area, to maximize this bullish move. Now, I know you will be asking me questions, especially the newcomers amongst us, that are we going to be having a buy stop order, or are we waiting for price to break out and retest the structure before continuing the uptrend move? Well, for those of you who have been with me for a while now, you know how we do it in this kind of situation, especially when we are profitable. That is, for those of us who have been part of the profitable journey so far this week, we can place a buy stop order above the $82.75 level to capitalize on this uptrend move. Now, why is that? We need to understand the dynamic and the rationale behind that decision. We are going to be placing a buy stop order because we are profitable and we can afford to leverage on some of the profit we had made so far this week to test waters around that area and see if it's going to work. And if it doesn't work, we know that we are only risking some of the profit we made. So placing a buy stop order if you are profitable this week makes a lot of sense. However, if you are new with us and you are yet to be profitable on the USOILSPOT, then I encourage you to wait for confirmation to join that uptrend move. And confirmation comes in the form of price coming back to retest the structure. Usually we look out for these on lower time frame, like the 5, 10, 15 minutes time frame, to continue the uptrend move. So let's see how price action is going to play out around this area. So that is how we are going to be capitalizing on an uptrend scenario here. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community. we cannot ignore the potentials that sellers can also come into this market. We could see a crash, maybe prior to the US macroeconomic event today, and of course the ones that are coming in later in the week. We are talking about the average hourly earnings. We are also talking about the NFP report. So we could see a crash, which could be as a result of profit-taking activities, of course. Now, if we are going to be selling, where will it be reasonable for us to position ourselves for a bearish momentum? First of all, remember that we have an ascending trend line here on the 4 hours time frame. Remember, this trend line here has been supporting this bullish momentum for the last 7 to 8 weeks. And if we are going to consider selling at this juncture, it will be much more reasonable to look out for selling opportunities at the breakdown, retest of the ascending trend line, and of course had more position at the breakdown of our key level at the $81 area. However, I have a strong feeling that we could actually sell before the breakdown of this ascending trend line, after considering the distance between the $82.25 level and the trend line, which dovetails to about 80 pips, which is not something we want to miss out on. Now, if we are going to be selling before the breakdown of the ascending trend line, then a breakdown retest of the $82.25 level on our lower time frame will give us a signal to join a bearish decline. So waiting for a breakdown retest could be a good confirmation. Please note that we are looking for good confirmation retest of structure before jumping into a sell below the $82.25 area. So as it is today, we have a simple trading setup we are going to be using to guide our trading decisions today, as we are going to, our center of focus is going to be between the $82.75 level, it's a 50-cent range, and the $82.25 level, to know if we are going to buy or sell, as this will be dependent on the breakout or breakdown of this structure. So let's see how this is going to play out. It will take about an hour or two before we get some significant confirmations around this area. So I encourage us to exercise patience, mark out these levels accordingly on our chart, and let's see how price will play out around this zone in the next couple of hours. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates as at when due. So this is my simple view on the USOILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if we have any questions before we move on to the next asset on our watch list. And if you have any question, just drop it in the comment section, and you can use that time to mark out those levels accordingly on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. See you in about 10-15 seconds. Cheers. All right. So in the absence of no questions, I want to assume that we are all on the same page and we can move on to the next asset on our watch list. And I just noticed that we only have 6 likes and we have over 12 people on board. Please, let's make the likes tally with the number of people on board. Please, this is your support to the channel, and I'll really appreciate as you do so. So with that being said, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is the GBPUSD, the British pounds against the US dollar. And in fact, we have some interesting situations going on in the market in the last 24 hours, as we saw the pound sterling rise tremendously into that 1.27 area. Remember, that area has been a key significant level for us in the last couple of weeks, serving as a key level for every week for about 3 to 4 weeks consecutively. And at this point, we are at a crucial juncture. Now, this asset here, since the beginning of the week, we have been buying, though we had a couple of losses on Monday. So let's look at this together. Let's look at this quickly, what really happened during the course of the week. And before I go further, for those of you who missed my top-down analysis on the GBPUSD, please check the link right in the description box below. I have it there so you can have an insight into how we got to this point you've seen on the chart. So during our Monday session here, we had a range-bound structure where price was confined within the 1.26650 level and the 1.2640 area, giving us a range-bound structure. And of course, we also noticed how price action broke out of that descending trend line we spotted on the 4 hours time frame, giving us a good and beautiful signal that it is reasonable for us to look out for buying opportunities. Now, during the live session, I emphasized that, okay, during our live session, we already had a breakout retest of the structure. We joined this momentum all the way from 1.265. We saw price rose into the 1.271 area before that massive engulfing bearish candle happened. So we had a couple of buy positions here, break even, then finally we saw price, due to the volatility that happened Monday New York session. We saw this one. It took us out with a loss. We also had another one triggered around here. We had a couple of losses on Monday, putting us on the negative side of our portfolio on the GBP USD. And with the structure stating that we sell below the support line of that range bound structure we identified at the beginning of the week, we had a sell position triggered at the 1.264. And I can remember during my commentary yesterday morning, I told us all to secure all sell positions and let's wait to see how the market is going to react to this current structure. And with price breaking out of the descending trend line on the higher time frame one more time, it was more or less a good signal that price will continue to the upside. And with our buy stop order still sitting at the 1.265550 level, as you will see here, and the 1.26850 level, we currently have two active buy positions running at this point, and all of which is dovetailing to about, let's say the first buy position is running with about 42 pips and the second one is running with about 11 pips thereabout. So we are roughly about 50 pips from two active buy positions, which is enough for us to be at break even at this point in time, considering the losses we incurred on Monday's trading session. So at this point in time, we have two active buy positions, and for the fact that price has moved significantly in our favor, we do want to be moving all stop losses to secure the current buy position as we await the US macroeconomic data coming up later today. And if you ask me, the most appropriate area to move all stop losses to is around the 1.2680 level and the 1.26750. Let's give enough breathing space for price action to move around. So let's move our stop losses accordingly. Now, with a well secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying this asset today, or are there chances that sellers may take over this market after noticing what happened here on Monday, as we saw as soon as price got into the area between the 1.27 and the 1.271, we saw a massive sell-off coming from that area. And right now the price action is back into that zone. We need to be very, very careful. So that is why I said we move all stop losses. Let's secure this position and let's see why the market has been behaving the way it has been behaving since the later part of the New York session yesterday, stroke the Asian session this morning. Now, as you will see here, let's look at things from a fundamental perspective, considering this whole consolidation phase we saw here during the later part of the New York session yesterday and the Asian session today. Now, from a fundamental perspective, I am of the opinion that market participants may be reluctant to place any aggressive bet at this point in time and prefer to wait on the sidelines ahead of the FOMC minute release, the ADP employment change report, and of course the ISM services PMI before making any directional bet at this point in time. And this could be one of the reasons why we see the market doing a consolidation between the 1.269 and the 1.268 since the later part of the New York session. Now, another thing we need to also consider is the dovish outlook from the Bank of England last week. Remember, their interest rate decision was last week, where they maintained interest rate, left interest rate unchanged. And we also have the anxiety surrounding the United Kingdom's election, which is coming up tomorrow. And there is a strong feeling that the British Prime Minister Sunak may lose that election, and this is really causing some stir in the financial market. So we don't know what is really going to happen, and we could attribute this consolidation phase to the anxiety of that election too as well. However, from the US dollar front, we still see signs that the dollar is finding it difficult to attract buyers, especially after Jerome Powell's speech yesterday, which is more or less like a dovish remark, where he highlighted that the US economy's progress on inflation and its return to a disinflationary path. So, with him reinforcing that market expectation that the Fed is likely to begin rate cut cycle in September, we may likely see the pound sterling build on the momentum, taking advantage of these buyers. But we can't jump into conclusions yet due to the economic events we are looking forward to today. We have the ADP employment change, we have the Fed FOMC minute publication, we also have the ISM services PMI, all of which could influence the short-term market dynamic on the US dollar. Now, given this current market dynamic, like I told you earlier, is advisable to secure our position, as we may see some volatility happen today. And while we secure our positions, please let's ensure that we have enough breathing space for price action to move around. Now, with this information here, how do we intend to capitalize on any opportunity today? Well, things are still looking very bullish here due to two factors. One, price action broke out of the descending trend line we marked out on the 4 hours time frame, which is a very good signal. We had a breakout and retest of the structure. And then the second one here is the fact that price is still sitting above our key level for this week at the 1.26150 area. Now, with this in mind, it makes a lot of sense that we look out for more buying opportunity. And where is it reasonable to add more buy position here? Well, the highest point for this week at the 1.27100 area. So I encourage us all to mark out this level right now. So we have the 1.27100 level here, mark it out appropriately, and have a buy stop order sitting above the structure, as a breakout of this level will definitely be giving us more opportunities to maximize the uptrend continuation. So I maintain a bullish bias on this asset for today. And in addition to that is this ascending trend line we have here. So since the beginning of the week, since the beginning of Wednesday session last week, we saw price had consistently respected this trend line, finding higher lows along the way. Now, as long as price still remains above the structure, I don't think we should be considering any selling at this point. So I maintain a bullish bias on the GBPUSD, and in fact, if selling pressure resumes, it may be a retracement back into the ascending trend line to continue an uptrend continuation. So I maintain highly a bullish bias on this asset today, and the only condition that will make me sell is for that ascending trend line to be breached and broken to the downside, maybe breaking down the 1.264, and furthermore the breakdown of the 1.26150 to add more sell positions. But in the meantime, let's see how the market will play out, and obviously I will be giving us updates on both my TradingView and Telegram platform. So I don't know if you have any questions whatsoever. If you do, please let me know in the comment section. I'm here and willing to be of help in that regard. So I will take the next 10-15 seconds off. Let's see if you have any questions, and you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. So I will be seeing you soon, and if you have found this content helpful and useful in making your independent trading decisions today, please click on that like button. Your likes are very valuable to me personally, and it's a source of inspiration for me, and it also helps the algorithm to push the video to a wider audience of traders who may find this content beneficial, hence growing this community alongside. So see you in about 10-15 seconds from now, and thank you very much for your support. Thank you for your likes. So I see a question here from Michael Moa. Michael Moa, and okay, who is that? Okay, from C40. Okay, all right. So C40 is asking, when forex price action doesn't go your way, do you wait to the next day to enter, or try to recoup your losses immediately? Okay, that's a very good question. Well, first of all, it is not advisable to try to recoup your losses immediately. That idea itself is not an healthy perspective to looking at the market, as you could get sucked up in the old choppy market conditions and keep on losing more money along the line. So it's not a healthy idea. So that one is kicked out of that question. So going back into the question again, when price action doesn't go your way, do you wait till the next day? Of course not. You see, if you have observed my analytical approach here in this community, you would have noticed that we usually take into consideration two perspectives to the market, that is the buyers and the sellers. Now, this perspective gives us an idea or area where it is reasonable for us to buy and where it is reasonable for us to sell. Now, if, for instance, let me give a visual representation here. Now, let's say in this case scenario, let me just paint something to explain myself clearly. Now, if to say I said we are going to be buying above the 1.26850, and in fact we have price go our way for a while, then it drops down, taking us out of that position in a loss or whatever it is. You see, that level that I have identified here still remains valid for buy positions as long as price still remains above our parameters here, which one of them is the ascending trend line, as you will see here, which still supports the bullish momentum in this market. So even if we are taking out of this buy position, we have a buy stop order again back at the 1.26850 to continue the uptrend move. So most times we could see situations where the market takes you out just to gain some liquidity and then continue the uptrend scenario. So if it happens that same day, of course we want to be taking advantage of that opportunity. So that is how we move in on such scenarios. I hope I made myself clear there. C40, if I didn't, let me know. I will try to make things much more clearer. All right. So in the absence of no further questions, I think we are all on the same page here. Okay, you're very much welcome, C40. So let's move on to the final asset on our watch list for today. Stay tuned. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And so far in the last 12 hours or so, we've been doing very well on this asset. We bought since yesterday, and the price had continued to rise to the upside after identifying a new setup prior to the end of the New York session yesterday. Now let's look at what has been going on since the beginning of the week. Remember, this structure you are seeing here is a new setup that came into play yesterday, but before this came in, we had something that we were using to guide our decision throughout the course of the week. So let's look at that quickly. So we go to the new chart here, and at the beginning of the week we had in fact, this market has been very choppy since the beginning of the week, which emphasized the level of indecision going on in this market. And I think I had a loss at some point within this old choppy market condition. Now let's look at what really happened at the beginning of the week. So we had a range bound structure here. We saw price ranging between the 1.2330 level and the 1.2319. It's a very wide range. I think about a $10 range, $10 to $11 range bound structure we had here. And one thing we noticed is that despite the fact that on the 4 hours time frame we had a descending trend line, which emphasized the strength of the sellers finding lower highs in this market, we see that price was unable to find lower low since the beginning of this week. Now, one thing you will notice here is how the $2,319 area had continued to negate all attempt by the sellers to find lower lows. Now look at what happened here at the beginning of the week. Buy pressure. Look at here, buy pressure. And in fact, when you're looking at this buy pressure, you all need to also look at the character of the candles. Whenever price gets into this area, you will see most of the time we have hammer candles at every point in time price comes into this area. Now, from a theoretical perspective, a hammer candle is a sign that buyers are still present in the market. And besides the hammer candle, you can see we had an engulfing bullish candle from this particular area, coupled with a higher low at this area, giving me much more confirmations that buyers may get stronger anytime soon, leading to the breakout of that descending trend line we identified on the 4 hours time frame. So it is more of a bullish perspective in this market as the path of least resistance keep hammering at an uptrend continuation. Now, with this information in mind, we remember we have been buying at the $2,323.50 level, the $2,330, and it got to a point I had to be a day trader for a while, capitalizing on short-term move as we saw price snapping back into entry point, as you see here, snapping back into entry point. And not until the early hours of today during the Asian session, we saw price break out of the 2,330, triggering the recent buy position. And of course, judging from the new trading setup I shared with us all on my TradingView platform and Telegram platform yesterday, we also had this 2,338 level to capitalize on a bullish move. So as at this point, you should be having a minimum of 2 buy position. The first one running with about 130 pips, while the second one running with about 50 pips. So we are roughly about 170 to 180 pips in profit at this point in time on the XAUUSD. So I encourage us all to move all stop losses. Let's secure the current buy position. If you would ask me, anywhere around the second entry seems most appropriate to move all stop losses to. Secure positions around this area, and let's see how the market is going to play out. Now, before we go into the technical details of what our plans will be, let's quickly have a recap of the market drivers in the gold market. And I was able to come up with something, as always. Let me share with you what I was able to come up with on the gold market. So first of all on the list is the Federal Reserve rate cut path, which is very indecisive at this point in time, as investors are waiting for more clarity on the Federal Reserve Reserve's rate cut path, leading to subdued and range-bound structure since the beginning of the week. Now, that is one scenario we are looking at, and of course, when we consider the Fed chairman's speech yesterday, which is more or less dovish, it favors the XAUUSD. Then another factor behind the scenes is the US Treasury bond yields, as we saw the retreat in the US Treasury bond yield in the last 24, 36, 48 hours is not helping matters at all. Then another factor that will be influencing the sentiment in the market this week is the economic data. We have the job opening, we have labor turnover survey, we have the ADP report, we have the ISM services PMI, we have the FOMC Minutes publication, and later in the week we are also looking forward to the NFP report, the average hourly earnings, all of which are labor oriented data that could insight or bring fresh impetus to this market. Then finally is the geopolitical tension in the Middle East and political development in the in France, Europe, and of course in the United Kingdom. We saw the debate between the past president and the recent president of the United States, which obviously has increased the polls in favor of Trump becoming president for a second time. And we also have the situation in France where the party of the ruling party did not do well in the snap election that happened during last week, and then the United Kingdom's election coming up tomorrow, all of which are going to be influencing the sentiment in this particular market. And besides that as well is the so despite the potential limitations here, the current fundamental backdrop we see here suggests that the path of least resistance for gold is looking very, very bullish. Now, how do we capitalize on these more opportunities in this market? Now, some of us must have missed out on some of these positions that we had in a couple this couple of positions we had in the last 12 hours. If that is the case, there's no point to worry. There are still chances that we could see more opportunities to capitalize on. Now, one of the things that we are going to look at here, since price had already broken out of both this trend line, let me zoom out quickly so that we can see what things are looking like. So we have a couple of descending trend line. The first one is right here, and then we have the second one right here. Now price has broken out of the second one, which is a positive signal in favor of the buyers. And from a technical standpoint, whenever price breaks out of a key structure like this, there is a chance that price could come back to retest the structure in an attempt to continue an uptrend move. That is one scenario, and price might not even come to that far. It might come back and retest the 2,338 that was just recently broken a couple of hours ago to incite an uptrend continuation. So for those who had missed out on both of this opportunity, let's exercise patience and see how the market is going to react to the structure. Then another perspective, the third one here, is the possibility that price could transition into an uptrend continuation pattern. It could be a flag pattern, a pennant, bullish rectangle pattern, whichever case it may be, where the breakout of the resistance line will be all we need to capitalize on the uptrend move. So as it is right now, I want to be marking out another level at the $2,347.50 area. So let's do that quickly. So we have another level right here. I encourage you to mark out this level. So we have the $2,347.50 level duly marked out. So we are looking to have another buy stop order above the structure so that we can maximize the potential of this bullish move. Now, you know how we treat our breakout of structure. If you have been part of this profitable journey, you can place a buy stop order above this level, so to test waters around that area. And if it doesn't work out, we know that we are only risking some of the profit we had made so far this week. But if you're new, a breakout, first of all, look out for a retest of structure on the 10 minutes 15 minutes time frame to continue the uptrend scenario. And if buyers find it difficult to break through and they still need some momentum, we could see price drop as a result of some short-term profit-taking activity into either the 2,338 or the 2,330 area, where we look out for reversal setup to continue the uptrend move. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give us all update as at when due. So this is my simple view on the XAUUSD for today. I hope I made myself clear, but if you have any questions or you need some further clarifications, feel free to let me know in the comment section. And that reminds me, we are going to be running the XAUUSD live monitoring window later today. It usually kickstarts about 5-10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volume of trading activity for that day. Today I'm going to be very busy, as I do have some personal activities that I'm going to be attending to, so I might not be around during the fourth hour of the New York session, but the live session will still be running, and I will definitely give the instructions that will need to guide our trading decisions in the journal beside the screen on the XAUUSD live monitoring window. So for the link to that platform, as soon as this session ends, you will see the link to the platform. Click on the link, click on the notify me button, and you will get notified as soon as we come on live. Now, if you have any questions, feel free to let me know. I will take the next 10-15 seconds off, and let's see if you have any questions, and use that time to mark out these levels accordingly on your chart, as we will be needing it as a reference point to guide our independent trading decisions today. And do not forget to give the video a thumbs up. Your likes, as always, has been inspirational to me, and of course it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. And for those of you who had clicked on the like button, I really appreciate your support. Thank you very much. See you in about 10-15 seconds from now. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. And I do hope you marked out these levels accordingly on your chart, as we will be needing them as a reference point to guide our independent trading decisions today. So it has been a wonderful moment with you guys today. As always, I really enjoyed every single bit of the time I've spent with you guys today, and I love the energy this morning. I really do appreciate your support and like so far, though we still have some people amongst us who are yet to click on the like button, but it doesn't cost you anything anyways. Click on that like button, and thank you very much as you do so. Today we were able to take on all of the 3 financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So I do hope you're able to mark out all the levels we identified on the chart. If you have done so, as always, well done and kudos to you. So all we need to do right now is exercise patience and allow these structures to mature. So it's on this note we have to call it a day here. First of all, and for those who are joining us for the first time, you're highly welcome on board, and I do hope you are able to gain 1 or 2 things from what we discussed today. And if you have done so, I look forward to seeing more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset have been doing, and of course prepare ourselves for the final trading day of the week. And for my advice I usually give during the end of the session is always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now, with this understanding in mind, let's ensure we have a well-defined risk management strategy in place to ensure that we protect our portfolio against any sudden pullback so that we can live to trade another day. So on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.